Hi everybody, thanks for joining me today. It is October of 2020. We just ended the third quarter of the year, and today I'm going to cover the FishHawk real estate stats for October of 2020, or really the end of the third quarter. It's going to include Lithia, Florida, which is where FishHawk is located, and FishHawk Ranch. Basically, we're going to talk about single-family homes today. There are some folks calling for a real estate market crash. Please stay tuned to the end of this video. I'll cover what I think is going to happen and what I see going forward. Without further ado, let's jump in. Here we're looking at total closed home sales for the year for Lithia, Florida for single-family homes. As you can see, from 2009 to about 2017, we had a steady increase in the total number of homes sold. 2018, 2019, we started dropping off. I believe that's because we started seeing a real shortage in the available homes for sale. I think it started to affect people buying, and they started looking in other areas. In 2020, the end of the third quarter, we're at 441 homes. Basically, that's the same as 2012. So fairly strong. I do think we're going to see a slowing into the end of the year. So we'll have to keep an eye on how that looks coming up. Next slide here is for total closed home sales by month. You can see we run this back to January of 2019. You will notice that May and June kind of spike. Our busy season is March, April, May, really, in this area. So what happens is it takes a contract between 30 to 45 days usually to close. So people start to look February into March, into April. Homes start to go under contract, and then May, June, July, you tend to see a bunch of closings. And then it kind of trickles off for the majority of the year. And it's a slow trickle, but it does trickle off. And then again, pick up May, June, July again. Now in 2020, we have a COVID issue and we have a lack of inventory issue. So both of those are kind of hindering what we have going on here. And then typically our holiday season is usually pretty slow anyway. This is new listings per month, and it does jump around a little bit, but certain times of the year you can expect to usually see more listings than others. And usually you see a jump in the March, April area. So March, April area. Again, this one, March, jumped a little bit. And here, we didn't have our jump in March and April, but June kind of came back a little bit, and then we kind of fell off the table here into July and August. You'll notice June is up 9.1% from last year, July 36.7% from last year, and August 5% from last year. This chart's basically showing the active inventory by year. You will see back here in 2007, 188 homes, all the way to 2010, 188 homes. And then you'll see a steady downtrend over the years, and we're currently sitting at 71 active homes on the market. Not really a great thing for the market. I'd prefer to see a more balanced market than it leaning one side or the other. This little chart, same chart, kind of shows where we're at with the holiday season, and then coming out of the holiday season, we had COVID, and all of a sudden a ton of buyer demand, no homes being listed, and a huge drop-off of homes for sale. Average sold home price with percent change from last year. Not the best way to value what's going on in the market, but it is something interesting to look at. If you keep in mind with the average sold price, it's taking an average of everything. We don't sell a ton of homes every month, so if you get some outliers and sell, let's say, 2 or 3 homes for $1 million or 2 or 3 homes for $200,000, it is going to affect the average sold price from last year. But if you look at what's going on here in the market, you'll see it bounces around just a little bit, but up 11% from last year, down 3.6, up 15, down, or up 14, up 3. Truthfully, I think this number is higher. We're kind of getting some outliers, I think. But we're starting to see some pricing pressure on the upside for sure. Median sold price per square foot tells a little bit better picture, but not the exact picture. You will see here that pool homes are in a lot higher demand right now than no pool homes. The reason being, in my opinion, is that our pools have been partially open for a while because of COVID, but not fully opened. And I think people are tending to want pools as opposed to no pool at this point. You will see that no pool has gone up in value from last year, 0.62%, and with pools have gone up 6.25%. I do believe that the number for no pool is actually a little bit higher, but is just not showing it here. I think once the September and October numbers come out, I think you'll see a change here as well. Pending home sales by month. Basically, this chart shows you what is going to be closing. You'll notice April, May, we were at 102. Now we're down to 66. So basically, in the next month or so, you will see our close number per month start to come down. I use this slide to help me see what's going on in the market. I know it's a little confusing, so let me walk you through what I look at and how it helps me going forward. Basically, I break the market down into price ranges from 100,000 to over $1 million. I look at the active homes for sale. I look at how many homes sold in the last 6 months, and then I look at the average home sold, which then breaks down into a supply of homes, and then the change from the previous quarter. You'll notice in Lithia right now, under 200,000, we actually have 0 homes for sale. So our supply in months is basically 0. We have nothing for sale, so we don't have any supply. If we come here to, let's say, 401,000 to 500,000, you'll notice we have about a 1.5 month supply of homes for sale. And as we break down each category, basically we're 0, 0.4, 1.2, 1.5, 1.1, 0.9, 0.8. This is an outlier, and basically we're looking at such a small subsection of what's going on in the market. You see these numbers kind of jump up and down every once in a while. But 9 month supply, I don't think that's really the case. I think we're just kind of looking at what's there right now. 4 months, 5 months, and then overall as a market, 1.2 months. If we come down and look at this chart, you'll see that 0 to 3 months is a very low market. 3 to 4 is a low market. Moderate is 4 or 7. Balanced is 5 to 6. I would love to see a balanced market. We haven't seen a balanced market here in a long, long time. High, 7 to 8, and very high is over 9. You will notice our change from the previous quarter. These are some big changes for a month supply of homes. So down 56%, down 44%, down 37%, down 20%, 60%, another 60%. Now here we're up 100%. So basically we have 2 homes as opposed to 1, and up 25%. Usually what you see is in this market, anything over 500,000 to $1 million, you tend to see a little bit more inventory than anything under that. However, we're in a strange market right now, and there's just not enough for sale. So we're seeing pressure on multiple areas here for sure. This next slide here is a snapshot of the end of the third quarter. Basically, I'm showing what our sales were. So 55 or 52 to 45, that's plus 15% sales wise. New listings 42 to 40, it's a 5% change. Active listings are way down, 47.8%. Months of inventory again way down, 57%. And then once again, I'm showing the median prices. So 6.2% increase year over year. For pool homes, 0.62% increase year over year for non-pool homes. I think we're going to see some more pressure in the next couple months in this area. There is, however, pressure throughout the market right now, certainly upwards. I'm a little surprised it's not more than this, but we're looking at a median number and not maybe actual results from, let's say, the same house. So going forward, I do see some more pressure here. So overall, the market is definitely a seller's market. It is lacking inventory for sure. Anything that is nice that's hitting the market is selling pretty quickly. Buyers are having a hard time finding what they're looking for. When they do find what they're looking for, there's multiple offers on the houses. Sellers, if you price your house right and it is in good shape, it will sell fairly quickly. Again, we're just lacking inventory big time. So if you have a house for sale, let me know. I probably have a buyer for it. As you can see from the market stats, we're in a strong seller's market. There's not a lot for sale, and what is for sale is selling really quick. For all the doom and gloomers out there, I just don't see it right now. We're in a different market than we were in 2007. Investors don't have 10 homes with no money down. Institutional buyers, I believe, are ready to jump in. So your Invitation Homes and American Homes for Rent, they're ready to buy if there's a dip in the market. Plus you have all these other companies like Zillow and OfferPad. They're all trying to buy stuff too. So I don't see it. That doesn't mean it can't happen. I just don't see it at this point. Interest mortgage rates are really low. We're currently doing forbearance for people that are behind. I don't know if that's going to get extended or not, but even so, it doesn't look like there's a ton of stuff that's behind. Again, it's kind of hard to tell a little bit, but right now it doesn't look like there's a lot of that in the pipeline. Now, things could change if the employment market doesn't pick up, but for now, I don't believe we're going to have an issue. It does still look like a strong seller's market going through until at least March. In March, I do believe we should have some new inventory hitting the market, but that's normal for the time of year. And truthfully, we can use it. If you found value in this video, please do me a favor and like it. Also, if you haven't done so already, please subscribe to the channel so you don't miss any future updates. As always, thank you very much. Have a great Halloween, and I'll talk to you soon.